Welcome to another wrap, and the first one for November, as the end of the year draws even closer. Morgans has recently been appointed joint lead manager of the upcoming Wagners IPO. Wagners was founded in 1989 in Toowoomba by Henry, John, Dennis, Neil and Joe Wagner. The company, which also owns Brisbane West Wellcamp Airport and Wellcamp Business Park, started with three trading divisions: Wagners Concrete, Quarries and Transport. It has since expanded into cement, fly ash and lime, reinforcing steel, on-site concrete supply, contract crushing and bulk transport, as well as lightweight composite fibre products. Between now and 2021, it's expected that $13 billion will be spent on infrastructure projects in southeast Queensland, where Wagners dominates the cement market. Just over half of its cement is used for infrastructure projects. The full roadshow will kick off next week, so please contact your Edward Street advisor if you would like more details. As mentioned last week, NAB was the first bank to report their full year results this week. Overall, the result is slightly softer than we expected due to the market's outcome being a touch softer and expenses coming in slightly higher than expected. Points to note were that overall net interest margins result was on the improve and asset quality trends are looking better. NAB trades ex-dividend a 99-cent fully franked dividend next Thursday, the 9th of November. Please note that the comments in this video are general in nature, and please speak to your Edward Street advisor if you wish to know if any of the stock recommendations suit your personal needs and objectives. I'll now pass over to Matt for his macro summary and maybe even a tip for the Melbourne Cup on Tuesday. Matt?
Thanks, Brad. Yeah, markets have continued to soar over the past week, which is great for investors. The Dow Jones, Nasdaq and the S&P all continue to make record highs after Amazon, Facebook and Apple produced strong results recently. Locally, our market, being the ASX 200, reached 5960 points through the week, and the All Ordinaries closed above 6,000 on Halloween Day, which coincidentally was the 10-year anniversary of our market's peak being 6850 all the way back in October 2007. A lot of you are probably wondering why the sudden rally and where to next. Well, the psychological barrier of 6,000 is clearly the next hurdle, and our technical analyst agrees that 6,000 points may be met with some resistance as well. The Small Ordinaries Index has been in liftoff since September, and I believe the smaller end of town has now filtered through to the bigger names, helping boost the bigger index. A lot of the smaller mining stocks involved in lithium, cobalt, nickel, copper and tungsten have been running strongly, and the Aussie dollar falling recently has also acted as a great tailwind for the commodity space. The run from these smaller plays has eventually rubbed off on the bigger names, with Rio now trading above $70 and BHP heading towards 28, which has eventually helped prop our market higher. Speaking of commodities, the oil price has been the notable mover over the week, approaching 2-year highs, with OPEC-led supply cuts tightening the market and draining inventories. As a result, we've seen some pretty good moves from Woodside, Santos and Allsearch this week. Stock specifically, we've had NAB's result yesterday, which Brad touched on earlier, and Telstra had their investor day yesterday as well, which didn't do a lot for the share price but gave investors comfort by reconfirming guidance and discussing their growth strategy for the money banked out of recent decisions to cut their dividends. Interestingly, our analyst Nick Harris has maintained for some time now that the NBN will end up becoming a disaster for taxpayers, and I know this is starting to play out as well in the press over the past week. Nick suggests that a redundant NBN would be a positive for Telstra shareholders with a $4.15 price target, so watch this space carefully. Finally, Melbourne Cup Day is on Tuesday, and for those that like a roughie, keep an eye out on Single Gaze and Abby Marie if she makes the field, as both of those horses are around 50 to 1, and after last year's result, I guess anything is possible. Thanks, Brad.
Thanks, Matt. As usual, on my left we have Cameron, who will run through his key buyer call for the week. Cam?
Thanks, Brad. This week I've been keeping an eye on a stock I've formerly made money in for clients, and that is Nick Scali, ticker code NCK. This company seems to have a never-ending sales. However, they seem to make it work. The stock currently trades at $6.96, which is up 15% from lows only last week. This company boasts very strong fundamentals, which include trading with a return on equity of 47%, strong earnings growth, a net cash position, all whilst operating on a PE of 14 times and offering a healthy dividend of 5.3%. Nick Scali seems to underpromise and overdeliver, which has seen the stock exceed expectations time and time again. At the most recent full-year result back in August, Nick Scali achieved net profit of 42%, or $37.2 million. This was above revised guidance given in May, whereby the stock revised its full-year target to 36 to 37 mil. Believe it or not, the stock was sold off as they exceeded their already revised earnings guidance. The recent sell-off on the stock, in my view, was unjustified. However, I note there are factors that are impacting the stock, notably the threat of Amazon and the anticipation of a slowdown in the residential construction. Whilst I'm not shying away from these ongoing threats, I believe Nick Scali has a strong online presence whilst operating in a space where customers want to touch and feel the goods they are buying. As for the construction side of things, I've seen more cranes in the sky here in Brisbane than I've ever seen before. And whilst they still remain, people will continue to shop and purchase their new premium 100% leather lounge to match their new apartment. This stock is not formally covered by Morgans, and this remains my personal view. I believe the stock has another strong 12 months ahead of it. However, I note the company is operating in a very tough sector. I'll therefore keep this one on the watch list and will look to buy if the sector came under further pressure. Thanks, Brad.
Thanks, Cam. Ex-dividend dates of note next week. We have Macquarie on Tuesday, which pays $2.05 per share. NAB, as mentioned above, on Thursday. And also, please be aware that Westpac reports on Monday. That's it for another wrap. Please feel free to share this video with your colleagues and friends, and make sure you like the Morgans Edward Street Stockbroking Facebook page. Also, subscribe to our YouTube channel below. Have a great weekend, and go Single Gaze and Abby Marie.